Thank you.
Good morning, everyone, and welcome to the New York City Audit Committee meeting of January 23rd, 2024. I'm going to call the meeting to order and ask the secretary to do a roll call.
Good morning, everyone. Our private members, Michael Spitzer, Chair. Mark Kaplan. Marcia Van Wagner. Public members representing Mayor Eric Adams, Paul Timus.
Present.
Representing Comptroller Brad Lander, Jacqueline Thompson.
Present.
Representing Public Advocate Jamani William, Wesley Paisley.
Present.
We have a quorum, and for the record, we have Larry and Angelo participating via Zoom.
Thank you.
I'd like to have a motion to accept the draft minutes of the Audit Committee meeting held December 13th, 2023.
Motion.
Okay, we'll take the minutes and give them to Katrina. All right, we'll give them to Katrina. At this time, I'd like to welcome the members from the New York City Employees Retirement System. And please introduce yourselves, and if you have anybody on Zoom, introduce so they could be part of the minutes.
Good morning. Please use the microphone. You have to hold the button down because Good morning again, everybody. Tom Camboris, I'm the Chief Information Officer for NYSERS. With me today, I have Dan Nunez, which is the CISO, the gentleman over to the far right, Mr. Herman Bernal, which is our Chief Director of Internal Audit, and Ms. Rita Sarrett, that is a part of the from our finance team that's going to provide the financial highlights. Grant Thornton is still our NYSERS independent auditors for fiscal year 2023. There have been no findings to date that have impacted NYSERS financial statements. NYSERS received the GFOA certificate achievement and it's presented in the NYSERS Most Exempted ACFR, published in 2023, December of 2023. And with that, now I'm going to pass it over to Ms. Rita Sarrett to present the NYSERS financial highlights as of June 30th, 2023.
Okay. I will be presenting the financial highlight for NYSERS. Let's begin with the assets. You can find the information on page 13 and 14 of the financial statement. QPP net position as of June 30th, 2023, reached $81.4 billion, up from $77.4 billion at June 30th, 2022. NYSERS 2023 financial statement shows VSF net position as of June 30th, 2023 at $994 million, down from $1.1 billion at June 30th, 2022. The QPP and VSF combined is $82.4 billion, an increase of about $3.9 billion from 2022. Now to the market return. You can find the information on page 11 of the financial statement. The total pension fund returned 8.18% for fiscal year 2023, more than NYSERS policy benchmark of 7.44%. Domestic equity, which account for more than a quarter of the total portfolio, returned 18.07%, less than the Russell 3000 benchmark of 18.95%. Total wall, excluding US EAFE, makes up about 11% of the total portfolio, returned 21.51%. Emerging markets, constituting about 5% of the total portfolio, returned 7.82%. The total fixed income segment, which takes up more than a third of the portfolio, returned 1.28%. Return 1.28%. Now to the funded status. You will find the plan funded ratio on page 17 as well as in the actuary section of the ACFA. Based on the entry age normal cost method, funded ratio is at 81.5% as of June 30th, 2021, the date of the most recent actuarial valuation. The ratio went up from 78.1% as of June 30th, 2020. Additionally, on page 17 of the ACFA, you will find the planned fiduciary net position represent 82.3% of total pension liability for NICERS and the 5 VSFs at June 30th, 2023. Last but not the least, the VSFs. In December 2022, the QPP transferred to 4 of the 5 VSFs approximately $8.9 million in benefit payment. Based on the actuary's estimate as of June 30th, 2023, there was no scheme payable to the correction officers VSF for fiscal year 2023. As a reminder, these $12,000 a year payment are guaranteed by law since calendar year 2019. That concludes our presentation for the financials. We welcome any questions you may have.
Does anybody, excuse me, anybody have any questions or comments or issues that they would like to bring up?
Find it. Yes, I do. First of all, I noticed that you have the fourth largest trade currency you deal in, Hong Kong dollars. And given the uncertainty of the Hong Kong situation and the fact that it's really now controlled by the People's Republic, is that a safe place to be? Right. I think it's something that people look at now. I'm going, hold on.
So, sir, my name is Daniel Haas. I work with the Comptroller's Office, primarily focused on risk and more recently financial reporting. The Hong Kong market, at least as it stands today, is considered to be a developed market. It's highly liquid, and to my knowledge, there's no, from an institutional standpoint, concern about regulatory risk, undue regulatory risk, the market's being shut down or our trading in the markets being impeded. So we're not seeing any chatter from our manager complex about risks in that market specific to the Hong Kong market.
I guess because I was a director of a Hong Kong company that I manifest concern about that problem.
I think not necessarily invalid. It's just we're not hearing anything.
Okay, well, let me go on then. You refer on page 38, where you're talking about level 1, quoted in active markets issued by pricing vendors. That's not necessarily what a level 1 is. A level 1 is marketable securities traded on the stock exchanges and that sort of stuff. As I know, most.
Yeah, you're correct. Level 1 is typically exchange traded securities. We may revisit or maybe clean up that language. Those prices are typically received from a vendor, Reuters, who
No, but they take it from the
consolidates those.
exchange.
But it would be, right,
so it's-
closing price on an exchange.
That's something to
Yep.
think about.
Yeah.
One or two more minor things. It's one of my pet peeves. You refer to hedge funds. That's a generic term now, but I would be very much surprised if some of those so-called hedge funds don't hedge. They're private investment partnerships. with hedge, and if you look at the portfolios of some of those quote hedge funds, you find they don't hedge.
Yeah, the hedge fund industry, you're right. It's a pejorative term, I suppose. As the systems that participate in that strategy deploy it, there's some mix of various strategies that almost serve as a stable value. You know, when you mix it all out, they return stable, relatively steady, low volatility returns when it's all. But if you were to look individually, you know, we have a combination of event-driven, uh, equity long short, and you know, macro policies. Forgive me, the specific sub strategies escape me right now, but what it turns into effectively is low correlation returns to that portion, you know, relative to the other strategies within those portfolios.
I understand that. I just, my own experience is somebody has just tried in some enterprise I have some connection with to make trouble because what we put as hedge funds turn out not to be hedged. And we are thinking seriously of changing the terminology.
Understood. Yeah.
All right. Now, the other thing is a sort of pet question of mine, and that is that you develop on page 42 a long-term consumer price inflation is the subject of 2.5. Certainly in the short run, that's turned out to be a bad assumption.
Yeah, certainly, you know, that hasn't been our experience over the last few years. I'm sorry, you're on page 42?
I am.
Okay.
And my question is that assumption appropriate given the price inflation we've seen in the last several years?
Oh, the COLA, right. Well, I suppose it's a good question for perhaps the actuary. However, if I were to play devil's advocate, you know, if you think of long-term averages and the Fed, you know, employing a 2% inflationary target over time, maybe that's not so unreasonable, but that certainly isn't our recent experience. But I think this process or this mechanism is designed to, you know, supersede various market cycles, or you know, not be as reactive to specific market cycles over time.
Okay.
Are there any other questions?
Yes. Can you turn to page 54, please? I'm just curious if you know the amount of individuals that are applied for these loans. I think under B, yeah, COVID-19 qualified individuals were permitted to apply for coronavirus-related loans. Do you know on average how many people are applying for loans? I'm just curious.
Okay. We will have to check with our staff and get that information for you. So I don't know on top of my head.
Thank you.
Please, when you send in the information, send it to Katrina Stauffer, and she'll distribute it to the audit committee members. Are there any other questions? So I'd like to thank you for coming this morning, and have a happy and a healthy new year.
Great, thank you.
Next up is the teachers' retirement system. as teachers are settling in, I'd like to have Grant Thornton, the controller staff, and the actuary all identify yourselves so we can have that also on the record in the minutes.
Hi, I'm Sharon Campbell from Grant Thornton. I am on the retirement system side audits.
Marla Hummel from Grant Thornton, and I am the lead engagement partner.
Kyle Chuber from Grant Thornton, and I'm the audit manager on the financial statement audit.
John Ettinger from Grant Thornton, and I'm a director on the financial statement audit.
Good morning, Kevin Morris, Managing Director, IT Assurance with Grant Thornton.
Good morning, Anderson Huynh, Office of the Actuary.
Good morning, Lynn Fleischman from BAM.
Good morning, Daniel Haas from BAM.
Robert DeRosa, Financial Reporting.
Mehdi Zafar from BAM.
Thank you, everyone. At this time, I'll turn it over to Mitchell to introduce yourself and anybody else that might be on Zoom for the record.
Teacher retirement assistant.
Hold it down, unfortunately. Yeah, unfortunately.
I'm Barbara Ovchacek, Financial Reporting Manager, and I will be presenting Teachers Retirement System Fiscal Year 23 Financial Summary. The accounting department is represented together: Fruchter, Chief Accountant, George Shaviachi, Investment Accountant. Also with us is Kate Chen, Internal Audit Director. I thank you, TRS Management, as well as Grant Thornton, for collaboration and commitment to quality work.
Push the button.
Combining financials. In my presentation, I will refer to the page numbers from the standalone TRS financial statements. The 2023 financial report is the 9th year of teachers combining financials. Thank you. The report consolidates the 401 Qualified Pension Plan QPP and 403 Tax Deferred Annuity TDE program. On page 8, the QPP net position as of June 30th, 2023 was 67.9 billion compared to 64 billion from previous June, an increase of 6.1%. On page 13, the TDE net position totaled 45.4 billion, an increase of 7.6% from 42.2 billion in prior year. The QPP and TDE combining net position was 113.3 billion as of June 30, 2023. This can be found on page 20, combining statements of net position. The 113.3 billion net position also appears on pages 216 of the Citi 2023 Annual Comprehensive Financial Report. Investment performance can be primarily attributed to investment allocations for particular market sectors and sectors' returns. On page 34, as of June 30th, 2023, pension target asset allocation were 35% in fixed income, 24.7% in domestic equity, 19.9 in international equity, and 20.4 in alternative investments. A breakdown of alternative investment holdings is found in the investment note number 3 on page 47. Teachers' investment performance for fiscal 23 mirror the returns of the following indices. The US Equity Focus Russell 3000 Index returned 19%. The International Stock Focus MCSI Index, Morgan Stanley Capital International World Index, returned 16.4. The Bloomberg US Mortgage Backed Security Index returned negative 1.52, while the New York City Custom Structured Index returned negative 1.18. These returns are in the MD&A section on page number 9. The pension fund as a whole returned 7.72. This can be found on the required supplementary information, schedule number 3, on page 63. The QPP statutory interest expense to the TDA increased to 2.3 billion. The QPP experienced an income of 2.4 billion on investments attributable to the TDA funds. This can be found in the table on page 12. The system, QPP and TDA combined benefits payment, increased by 2.8%. The increase was mostly due to increase in partial withdrawals and increase in payments to retirees. These figures are on page 22 and 23, statements of net changes. In terms of current year investment holdings, as of December 31st, 2023, teachers' holding increased another 4.5% compared to June 30th. In terms of funding, the fiduciary TRS net position as a percentage of the total pension liability was 83.2% as of June 30th. This method reports assets at current fair market value. The ratio of actuarial assets value to entry age normal actuarial accrued liability determined as of June 30, 2021 was 83.8%. This can be found on page 7 of the 2023 ECAFRA. Other points to note: included in this financial report, teachers received unmodified opinion. The system, as usual, received a managerial note involving the valuation of alternative investment assets. Fiscal year 2023 administrative expense included additional 3.6 million of accruals due to recognition of interest and amortization expense as required by GASB 87 leases. The combined TDA and QPP admin expense, excluding GASB 87, amounted to 88.2. In fiscal year 2023, TRS implemented GASB 96, Subscription-Based Information Technology Arrangement, SPITA. The GASB 96 adoption did not impact teachers' financial statements. Finally, the MD&A also includes the breakdown of financial activity by employer on page 7, schedules detailing the QPP and TDA cash flow, QPP and TDA percentage holdings in funds, percentage of controller managed pension fund versus TRS managed variable funds on pages 16 to 18. This ends my presentation. Thank you.
Thank you. Does anybody have any comments, questions?
Yeah, I have one.
Larian, I'll call on Larian first.
Yeah. Okay. So I see on page 162, you list out the various parts of education that are part of the pension plan. And you have charter schools there. And I'm wondering, so when a charter school decides to come into the pension plan, they do it under the same terms as an ordinary DOE school?
Correct. Correct. The schools which are converted, that's obviously required for them to continue with their pensions. The new schools, they could opt in or out, but obviously they have to comply with the same pension provisions.
Okay, so it would require the employee and the employer both to make the contributions in the same way.
Correct.
Okay, and I'm wondering, is there any movement you've noticed among charter schools to get into the pension plan? Because I mean, I know the number of charter schools are increasing. I was just wondering if participation in the pension plan is increasing as well in charters.
Not dramatically. I think we had
Mhm.
one a couple of years ago. It is an administrative, undertaking to be part of the retirement system. Obviously, we encourage it, but there is, there's an administrative undertaking for it.
Right, and there's no, in the charter school legislation, there's no assumption that when the charter school becomes a charter school or starts up as a charter school, that they have an obligation to enter the pension plan.
Right, for a new school. Again, if
Right.
it's being converted, if you take, public school teachers and something like that, and you have a pilot as a charter school, that's different.
But I'm sorry, could you say that again? I didn't quite hear you.
If it's not a new school, when they started really with the charter schools and they converted the DOE converted some public schools, so those would were required to remain in the pension system. New
Yeah.
schools, it's how it's established.
Right, so there's no obligation on their part to join the pension plan.
Correct.
Okay. And there doesn't, from at least what you've seen, there's no sense that as the number of charters increase, charters are coming into the pension plan.
Not in large numbers.
Okay,
Again, and again, there's no current obligation. Nothing
Right.
prevents obviously
Right.
the city from making it
Right.
obligatory.
and this holds even for charter schools that are given space in public schools.
Right. I'm not aware that
Um,
location is, an issue.
Okay. I had one other question that you may not be able to answer. It just kind of struck my thought. On page 163, you have a table of average salaries of service members. And you have the men on the one side and the women on the other side. And obviously there's more women and it's always been the case. And that for the first few cohorts, 25 to 29 or 30 to 34, you see women's average salary being higher. And then something happens at 35 to 39 where it switches. And it remains the case so that for the rest of the cohorts, the men are making more money than the women. Do you know, is that because they're becoming administrators? Do you have any idea why that's happening?
We get first. I'll just say that, the 163 is from our ACFRA, just to let people know, and these are numbers. We get annually a part of the evaluation from the Office of the Actuary. I think it's. I can't speak to the actual.
Okay, gotcha.
Yeah, I can only.
Okay, I just saw it and it struck me as sort of odd, the way it happened at a particular time but okay, so I should ask the actuary, is what you're saying.
Well,
Yeah,
the actual.
yeah.
Okay.
Okay.
Okay, thank you.
Well, thanks.
Thank you.
I'd have to look into it, but yeah, I do agree it's a little odd. Well, we can get back to you on that issue.
Oh, that would be great. Yes, I would love to hear that.
Again, I really don't think it's an actuarial question. You know,
Okay.
we really have
All
to
right.
ask the DOE.
Okay, well,
Just
thanks for
Just
the
as a
help on
follow-up
that.
to what Larian asked, can members of the charter schools join the TDA?
Yes.
I have a comment and then some questions. There's a reference on page 11 to the investment expenses of $518 million. How does that compare to what the other comparable institutions are spending for investment expenses as a percentage of assets?
I'd have to get back on the specifics. I know, you know, maybe Ben could speak a little to it, or our investment administration area. I know, obviously when the hiring managers are hired, all expenses are looked at. I don't know. See if.
So when we're referring to investment management fees, which is the bulk of the fees that the portfolios incur, I can tell you that when contracts are negotiated, we take advantage of scale among the 5 QPPs, and they're all being charged the same rate, which takes advantage of that increased scale. Similarly, when we're negotiating limited partnership agreements, the same applies there as well. Any system participating in a given portfolio or given deal has the same economics.
The first paragraph?
Page 33, in the first paragraph, 2 lines from the bottom, was 4 billion million. Come on, that's
4
a mistake.
point.
Certainly a very large number, yes.
You see it?
Okay.
Just
We'll look at that.
this is a question I ask generally. You indicate here not invested cash is swept into a custodial bank, which is not, why don't you insist on having that secured, or why don't you put in the financial statement something we see in others where you say that we've checked the creditworthiness of the bank for all times?
I'm sorry, you're referring to the same page 33?
No, page 38.
38, yeah.
It says
Oh,
the
okay.
fund's cash balances can exceed the FDIC insured limits. And in today's world, I'm accustomed to somebody saying either they require the collateral, or they have a constant evaluation of the credit of the bank in which the deposits are made.
Understood. I can tell you that, and forgive me, I'm not the authority on how the short-term investments are structured. However, the sweep vehicle is an institutional, what we considered a money market investment through State Street. The State Street, if I understand correctly, conducts counterparty risk assessments of that, and within BAM we also have a credit team kind of coming together that does a lot of the same work, but although that's more for the short-term desk that we trade ourselves. There are parameters and investment policies for that STIF program, for that sweep vehicle, that limit the exposure you can have to any one counterparty, limit the size of investments to any particular issue. And there are various other, diversification parameters kind of baked into that. A certain amount only to a given sector. Sometimes you see geographic, although I doubt for this particular instrument. There are probably duration limits in there. So I guess my point is this sweep vehicle is designed to operate as a money market where the investments underlying have been are reasonably safe. And some diligence has been conducted onto counterparty risk, that sort of thing. But I can certainly kind of fill that in for you and be happy to follow up on it with.
I'm just accustomed to seeing another sentence that says that the creditworthy of the counterparties where you have the real exposure is monitored constantly. It's a protective measure in terms of the way the account is set up.
That's a fair comment, and first we'll confirm that that's happening, and then make a note of that. Thank you.
Any other comments, questions?
I have a question. Is there any of impediment for charter schools to enter the retirement system? And this is just kind of like a follow-up when you were saying that location is not an impediment to it per se. So I'm just thinking, is there any at all?
Just being able to meet the terms to, set up and be able to administer it.
And I have another question. Can you just explain what the DOE Galeno employer portion is? And this is related to the Galeno litigation that happened, the class action?
Correct. What page are you on?
Page 9. And there was another page, but I just kind of lost it.
Didn't find it, but yeah.
Let's see, page 9. 1, 2, 3. 3 paragraphs down. 3 paragraphs down. 1, 2, 3 lines in. Kind of my thing. Where it says primarily due to increases of receivables from the DOE Galeno employer portion.
Yeah. So other assets has to deal with how we move. We for our budget we have funding, but assets which need to be allocated. So that this had to do with the funding for the Galeno budget, and the Galeno being the cost we incurred due to the DOE Galeno lawsuit. Had to do with standardized tests back 20 years ago.
I'm a little uninformed. Can you just break it down how that occurs? Because I'm thinking of it as class action, and then I'm seeing the words like receivables, and so if you could just break it down, like
No, again, this is just in terms of our assets. In order to pay for our expenses, we need to move asset. Let's say we have one expense account which needs to cover QPP, qualified pension, and TDA, tax deferred annuity expenses. So we have to move the assets in to cover the expenses. So so that's what it's referring to. So if we it's not related. This is an administrative cost in dealing with being able to pay out the Galeno participants and the build we had to do because it's unusual for a pension. So that's what this cost is. It's not related to the lawsuit itself. It's the administrative changes required in order to make make us able to carry out what the court says.
So and this is might be a dumb question. Oh, so this might be a dumb question. So I'm just thinking, like, what class actions really amount to adding to administrative costs? We had a meeting with one of your counterparts, and we were talking about the potential class action that I think occurred 2023 regarding students receiving their programs for children that are disabled. And so I'm thinking in my mind, like, what are those type of class actions that end up becoming burdensome costs? That's what I'm trying to figure out. Yeah.
If the court has a decision which is very, let's say, new in terms of a new, again, for us to pay a benefit where we have to reprogram our systems because, again, we've never had to deal with, this situation of, basically making people who apply to be teachers whole, decades later. So that creates an administrative cost. So it all depends on what the, what the court is ruling on, and how big of a change it is.
In addition to that, on page 84, schedule of administrative expenses, you can see, a breakdown. This year we combine modernization and DOE class expenses. So this is on the ACAFRA, if you have the ACAFRA document file, and that will be located on page 84.
Page 84.
Yeah, that's from, again, the ACFRA. It's listing of our administrative expenses.
No, because to me, I'm thinking usually when you go into litigation, usually you always think about, oh, it's just going to be a settlement going forward. But now it's affecting the retirement systems of current employees, future employees, administrative costs. It's to be something that whenever the city considers it, they should actually say, oh, this could be a potential burden. Maybe we should fix the problem before it becomes a class action.
Just for us, obviously, as a system, Congress, we have a TDA, so almost every year we're building out based on the latest, obviously the latest legislative changes. That's just what we have to do. So, how much, like others, we were happy that on the TDA side because, with the latest Secure Act, it came big provisional changes and there was pushback and it was delayed 2 years. And the reason why there's pushback is because us and others have a lot that we need to build in order to make, whatever Congress, legislates to make it actually happen.
Is anybody from the comptroller's office regarding, I guess not, this would be settlements, the city settlements, the Bureau of Litigation? I don't think so.
That would have nothing to do.
That wouldn't do anything here. Nope. Out of scope.
This is primarily the benefits that like members will be receiving.
Curious. Dow Jones U.S. Select Real Estate Securities Index return 6.4%. Is that indicative of the market for affordable housing or generally Wall Street purchasing homes, etc., property? Just curious. That is first paragraph, last line. Is this Wall Street gobbling up property? I don't know. Page 9. I just like that page.
So the Dow U.S. Select Real Estate Securities Index, it's sort of it's a REIT index actually, which it's I mean, obviously it's indicative of the performance of listed real estate, which have their own pricing dynamics. Those are all traded on a secondary market. History. My experience with it is there's a little more price sensitivity, rate sensitivity in those prices than you would see in the real estate that we hold in the portfolios currently, which is largely private, limited partnership participations in real estate deals. So it's a good measure. It's not the best measure for how real estate would have performed. but it is a sector of the overall equity markets, which actually overall U.S. equity markets were up something like 20% for the year ended June 30th.
Okay.
Yeah.
Yeah, I'm done. Thank you.
Picking you in comment. The name of the city of New York is with a capital T. You're
Thanks, Mark.
consistently lowercase.
Our name actually is different, but yeah, thanks.
If there are no other questions or comments, I'd like to thank you for coming this morning. The next entity to present would be BERS, Board of Education Retirement System. We'll take a 5-minute break to get coffee. Okay, the next entity will be BERS, the Board of Education Retirement System. So please introduce yourselves or anybody that's also on Zoom for the record.
Good morning. My name is Chitra Subramaniam. I'm the Director of Fiscal Operations at BERS. Joining me today is Kazi Ahmed, Deputy Director of Fiscal Operations, Ms. Ina K, Supervisor of Financial Reporting, and Mrs. Isafili Ade, Director of Internal Audit. Our auditors are from Grant Thornton, represented by Ms. Sharon Campbell and her audit team. I would like to take this opportunity to thank the Office of the Actuary, the Controller's Office, Bureau of Accountancy, and Asset Management for their continued support and guidance. Thank you. BERS combined net position for fiscal year 2023 was 9.3 billion, an increase of 7.7% from fiscal year 2022. The QPP's net position was 6.2 billion, and the TDS net position was 3.1 billion. Investments were at 9.8 billion, and the return of investments was at 8% on the total investments. Our fixed asset mix comprises of 47% equity, 27% fixed income, and 26% alternative private investment. Total contributions, which include employer and employee contributions at the end of fiscal 2023, were at 400 million, and benefit payments were at 469 million. The QPP's net position as a percentage of total pension liability was 98.83% in fiscal year 2023. Among other key matters, Secure 2.0 Act of 2022 provides for the adoption of Roth TDA, meeting certain income and age criteria. Beginning January 2024, BERS expanded the TDA program to provide Roth TDA options to all TDA contributing participants. Also, Chapter 721 of the laws of 2023 was signed into law on December 8, 2023, and takes effect on July. Sorry. This law provides that employees who are eligible to join BERS will be automatically enrolled unless they opt out within 90 days of employment. Thank you. I'll be happy to take any questions.
Does anybody have any questions or comments about BERS financials?
There's a statement here about Chapter 364, 23 voting members. And the next thing it says is it now consists of 27 members. How do you get a statute that says 23 and now you have 27?
Which page number?
I did read the whole thing.
Oh, this is regarding Chapter 364 of the Laws of 2022, the board member constitution, or? Yes. Yes, 23 voting members. You have 5 members elected by the PEP members and one trustee from each borough. So you have 5 boroughs, and 13 trustees appointed by the mayor. And we also have the representatives from the chancellors of school and the controller's office and their alternate trustees. So totally we have 27. Okay, I see what you mean. We'll expand on the sentence in our next report. Okay. So it adds actually the chancellor's school and the controllers, so they have the alternatives, so that adds 4. So we'll expand the language a little more in the next annual report.
I have to ask, probably doesn't relate to the audit, but well, I'm not. Would be nice to call the city of New York with a capital T. And then on page 8, you say high yield and credit recovered. I presume what you mean is high yield bonds, but what is credit that recovered? The sentence says, in the U.S., President Biden signed into law a bill to suspend the nation's debt limits, alleviates financial stress. Something is missing there grammatically.
We'll get back to you on this. This is a language, I mean, this is our consultants.
I understand it's jargon, but I can tell you that somebody was once in the business, you need to look at it.
Yeah.
And the other thing I point out is that the U.S. fixed income market experiences fluctuations, but ends positively. That's quite something, okay. All right, apart from the fact that it's the capital T in city.
If there are no other, oh, okay.
For those kind of services.
I think when we issued the RFP based on the participants who participated in the RFP, I believe the committee selected the consultants.
On those tiny little ones. It costs more to print it out than they're worth.
It's a schedule we received from the Bureau of Asset Management. We kind of disclose everything in the schedule. So
Yeah, that's a point in time. So it could be a reclaim that we received or something like that that hasn't been converted yet.
So it's the tag end of things.
Yeah.
Page 49. Let's see, 1, 2, 3. C, under the Secure 2 Point Act. Can you just describe how does that affect BERS? Some leeway, yeah.
The ROT program was, I mean, BERS expanded the ROT program to all TTA participants starting January 2024. So we are still rolling out the program to all the participants. So this section is about all the laws that were recently passed and in effect, and which would affect BERS. So it's still, I mean, we just rolled out. I wouldn't have all the numbers, but probably by next audit committee meeting, I'll have better numbers on the ROT.
So roughly like the next time we meet next year, okay.
I mean, January 2024. So I think we have close to right now, based on the last payroll we received, I think we have close to 150 participants who, participated in the ROT. So it's still ongoing at this point.
This act extended what's called an RMD, a required minimum distribution. At one time it was 70 and a half. It's going to ultimately go up, I think, to 75. This act is like one of the things that they just, the participants benefit. They get the dirty work of cleaning it up and reprogramming everything.
No, because I'm just thinking about where it says there's some leeway not to recover pension overpayments from plan administration errors. And I know we have discussions about this every now and then, like overpayments, errors, and so often. I'm just kind of curious how that's going to affect you guys going forward.
I'll have to get back to you on that. On this.
So if there's no other questions, or you still have any, Wes? Thank you for coming this morning.
Thank you. Thank you.
Take a cup of coffee when you leave. Next item up is, what entity is the New York City Fire Pension? I'm sorry, it's the police.
Thank you. Keeping you on your toes, Amar.
It's a wake-up call.
The fire department's going to be very angry at you.
Good morning. Please introduce yourselves, and once again, if anybody is on Zoom, introduce them for the purposes of getting it into the record.
Good morning, everyone. My name is Stanley Thomas. I'm the Chief Fiscal Officer at the Police Pension Fund. I'm accompanied by our Director of Internal Audit, our Director of Cash Management, and the rest of my accounting team. I'm just going to jump right into it. So, fiscal 2023 financial highlights. The fund's net position restricted for benefits increased by $2.7 billion, or 5.2%, to $54.3 billion for fiscal 2023 compared to fiscal 2022, which was a decrease of $5.5 billion, or negative 9.6%, to $51.6 billion for fiscal 22 compared to 21. Increases and decreases in the fund's net position are primarily due to the fluctuation of investment returns, contributions, pension benefits, and withdrawals. During fiscal 2023, member contributions decreased 4.8% to $267.7 million, as compared to fiscal 22 contributions were $281.2 million. Increases and decreases in members' contributions are primarily due to the fluctuation of active members and their voluntary and required contributions. Benefit payments and withdrawals were $4.3 billion, and admin expenses were 30.3 million. As of June 30th, 2023, the QPP portfolio asset allocation consisted of the following categories: U.S. domestic equities, 20.2, fixed income, 32.2, international equities, 7.3, emerging markets, 4.8, private real estate and private equities, 19.5, hedge funds, 5.4. The total QPP return, the portfolio return was 8.1. The asset allocation for the police officers variable supplement fund consisted of 66.2 in equity, 33.8 in fixed income. The total portfolio return was 10%. The police superior officers variable fund consisted of 65.6 in equity and 34.4 in fixed income. That fund's total portfolio return was 9.9. So some operational updates that I would just like to share with the committee. Every year we usually give you guys an update with our COPS 2.0 project. So that's our, while rollout 1 for COPS 2.0 was in production, the team focused on finalizing the design and components of rollout 2 and started the design of the foundational components of rollout 3. There were no major production changes for rollout 1. The fund went live with rollout 2 in November, which focused on retired members regarding their pension and death benefits. In rollout 2, the project is starting to data map, started the process of mapping data for converting members' contributions, service tracking accounts, and design the employer payroll process. Another major operational change in fiscal 2023 was that the Board of Trustees passed a resolution to establish the Audit Committee. Since that resolution has been passed, we've been holding quarterly meetings with the committee. Overall, fiscal 2023 was a pivotal year considering the positive return on investments compared to fiscal 22's performance. We continue to build our great working relations with the Comptroller's Office, the Actuary's Office, and the audit team at Grant Thornton. A special thanks to all three of them for making the audit process seamless. We really appreciate all you guys. Thank you.
Does anybody have any questions or comments?
Yeah, I have a question.
Marsha.
Okay.
Go ahead, Larry.
Go, Larry.
We can't hear you.
Can you hear me now? Can you hear me now? Hello?
Oh, yes, I'm sorry, we're nodding here, but you can't tell because we're at the opposite end of the table.
Oh, right. Okay. I'm just curious because you said the member contributions went down. That was due to a decline in headcount in the police department. Did they slip a class? I mean, what happened there? I'm just curious.
Yeah, so that figure will fluctuate every year based on the number of active members. So there were less classes and less active members compared to previous years. So that would be one of the factors. There are also additional voluntary contributions, which also could play to it. But the biggest factor would be number of active members.
How much did it decline?
I don't have that number off the top. Actually, let me check 1 second. So on page 17 of our financial report, it has membership data. If you look at the line where it says active members, it dropped about 1,000. So that goes to the factor that is one of the factors why that contribution amount will decrease.
Okay, thank you.
You're welcome.
Yeah, I have a question about the management letter, which found some deficiencies, and it sounds like on his internal control, it sounds like the explanation was kind of staff shortages or not enough people, because resulting in what is it called in here? Anyway, yeah, with the IT and so forth, segregation of duties, conflict, right? So, and so again, one of the reasons had to do with personnel. And so, what is it that constrains the system from having sufficient personnel to avoid this problem?
Sure. So I think Grant Thornton brought this to our attention about 2 years ago. So this is the second year, and Grant Thornton, feel free to correct me if I'm wrong. This is the second year that it has been brought up. So after the first year, the issue really comes down to this. Our IT department is fairly small, and there's only 2 individuals who maintain that component of the database access for COPS 1.0. So you're always going to have some kind of conflict if one's out on vacation, and it's difficult to have that separation of duties. So due to that recommendation, we did go to and request additional IT members. From the number that we requested, we were approved only a limited amount. So that's one of the main factors that's causing that difficulty for that separation of duties. So we are going to ask for additional IT heads. We have actually just fill those positions. So we're hoping that that would help alleviate some of the concerns, but the positions that were approved, I don't believe was pertaining to the concern here. But we did try to amend that.
Okay, so and the permission comes from the board? Where does it come from?
So our budget process, we present that to the Board of Trustees, and then they make that decision. OMB also has input into it with the structure of our fund is. So that everything is presented to the board, and the board did, which we appreciate, did approve positions that were needed. So the plan is to see if we could request again, or we haven't started budget planning for this upcoming budget season yet. But to address those findings, we are trying our best to do that.
I have a follow-up question.
Can I do a follow-up question? Don't you guys have corpus funding?
Yes, we do have corpus funding.
Okay, so it was then a decision of the board not to fund as opposed to there being a problem with not enough funds. Do I have that correctly?
Can you repeat the question? I'm sorry.
The question is, since you have corpus funding, if your board decided to not fund these positions that had already been flagged as problematic in management letters, that was a decision they made not based on not having the funding.
Yeah, so we presented each position. We put a job description of it, the need of it. We mentioned audit findings pertaining to it. So then it's on the trustees on their decision whether or not they want to approve positions. They did approve positions, so it really comes down to them. I know OMB has a stake in that as well. We share that presentation with them. I think they also come through the mayor's representation on our board. So I'm not in a position to figure out why they made the decision, but those were the decisions that they made. And so,
No, I hear you. Thank you.
Of all the city agencies to have this problem, I would think the police department is the most sensitive. And if anything ever happens, and explain that you didn't have the position filled, will be, to say the least, embarrassing.
Yeah, so again, the fact that it's also mentioned again on a report for the second year, I'm gonna I want to let the board know that it did come in our report twice. Grant Thornton actually comes to our board and makes the presentation in person. So, you know, to answer your concerns, I would agree to it, but you know, I work for the board and I'm going to present to the board, and then based on the needs, because there's also for this fiscal year, I'm sure you guys hear about all the budget cuts. So we haven't started budget season yet, so I'm not going to comment on it, but I will also express the concerns of the audit committee to our board as well.
In the world in which I live, you have 2 strikes. The third strike, somebody would be out on this kind of sensitive stuff.
Yeah. Hopefully, I'm not out next year.
Did you have any questions?
No worries. So you stated it's not enough employees, but when I look at that statement, it says that it's also a policy enactment, meaning that they flag that there's segregation of duties. So even if you had more employees, then those more employees would make the same mistakes as the 2 employees of deleting and erasing records. So are you planning to update? Because yeah, I think there was. Let's see. Who knows?
Just what page? I'm sorry, just so I can look
I have no idea. It's not a page here.
It's on the management letter.
Yeah, it says if segregation of duty is not feasible, management should consider implementing mitigation controls, activity log, really basic stuff for IT. So yeah.
My understanding of that, and Sharon, feel free to correct me if I'm wrong, was for in our manager's point of view was because of the limited resources is why we were having that flag. But I'm just trying to read that section there for.
Yeah, maybe I misinterpreted it. But
okay.
If you could just glance over it and just
okay, sure.
correct me.
Yeah.
Are there any other questions? That's not a question anymore, it's an order.
Just to also mention another fact, I'm still trying to find that, but another factor aside from the additional headcount is limitation in our current pension administration system. We call it COPS 1. I gave you guys a quick update about COPS 2. That software is extremely outdated and limits some. Just the structure of the software itself has limitations, which is why we're pushing COPS 2, and we went live with Rollout 2, so we're paying our members through that new system now, and then for active members, we already started processing it. So it's a combination of those two. You mentioned policy. I would just have to get back to you on that just to look through it again, but I know those were the 2 main factors for that finding.
Do you guys understand what I'm asking, right? You could nod no if you don't. So my thing is, from your prior question, it was you had 2 employees. Those 2 employees, if one is out, the other one has to take up the slack in administrating whatever duties it is. From my interpretation reading here, there's another issue that if one employee deletes a record accidentally, the other guy is not going to know, even if he's sitting right next to him, jokingly. Let's say you have 10 employees, then those other employees will not know if they delete records. So that's what you have activity logs. It's kind of like a procedure policy. You're just tracking the seed users. I see this more common in health records. So usually you'll have like each user is going to log and say, I touched this record. Why'd you touch this record? I had a request. Why'd you touch this record? Because I got bored. Okay, you're fired. Moving on. So that's why I'm kind of saying it's more than just a numbers question. It's a policy question. But are you telling me there's something different, like it's more technical policy? That you can't track who's deleting and touching records at a given time?
I'll double check with our information officer and just confirm. I don't want to put it, and I'll respond back to that question. I do apologize.
Yeah, I can talk a little bit to that. First, I think it's important to shed a little background on this. Number one, if you look at the SOD issues in the past with COPS 1.0, they were far more pervasive than what we saw with COPS 2.0. So I think it's important to note that management did realize the issue and the risks at hand, and they did make improvements on that. That said, I think to your question, anytime you have resource restrictions, you're going to have SOD issues. That's just a fact of life. So adding people, I think, would certainly help. However, to your point, I think implementing a monitoring control over those folks with privileged access to make sure that whatever they do is appropriate and it's documented and approved, I think that's the other part of it.
So you're telling me if I have 20 people compared to 2, adding more people is going to make the problem of activity controls easier? I disagree on that statement.
I'm sorry, say that again?
If you have 20 people compared to 2, I don't think that's, your statement sounded like having more people is going to solve the problem of activity control. I disagree with that statement because essentially you're just coordinating people to discuss what they're doing in their daily jobs. It could be done with 2 people, 20 people. The numbers doesn't affect it. It's really just you having the policies for it. But unless that's a misstatement that you're telling me.
No, what I said was adding people can help resolve the issue, and by that I mean
how?
By that I mean if you have 2 people in IT and they both have admin access, right? There's a challenge there. If you add a third, it makes it more likely that you can segregate their responsibilities technically within the system.
That's a policy. That's not a number solution.
No, that's a technical control. It's not a policy.
It's still a policy. You could make all 20 people admins. The policy makes those other people non-admins.
Yeah, I'm talking in terms of information technology and who can do what in the system. If certain people only have admin access and they don't have database administrator access and they don't have developer access, technically speaking, you've addressed the SOD risk.
And how do you do that? By adding 20 people, 30 people, or writing the rights in the system, which is a policy?
No, like I said, it's a combination.
Thank you. It's a combination. That's all I need to hear.
Okay, if there are no other comments or questions, I'd like to thank you for coming this morning.
Thank you, everyone.
Ooh, still got one. Oh, Millman. I remember I spoke to them a few months ago, and we had a discussion generally about communication back and forth, and they said that they were unclear about the communications with you, the fund, when they do their audit. I asked them if it's because of maybe security reasons, and they said no. Just to clarify again, you guys have no communications issues with Millman and sending documents on time during audits, correct?
Nope. His name skips my mind. I think it's Steve Porter, I want to say. Scott Porter, right? So I was personally working with him directly via emails, and we set up a portal and where we shared documents back and forth. So I'm not aware of any issues that we had between us.
I'll need to hear.
Once again, thank you.
Thank you once again.
And now we'll do fire.
You gotta put it out there into the universe.
Good morning. Could you please introduce yourself and anybody that might be on Zoom that's part of your team?
Sure, thank you. My name is Amar Dayal. I'm the chief accountant for the Fire Pension Fund. And to my right, I have Simone Sewak, who's the director of budget, and Jenny Wu, who's accountant in the accounting department. Online, I have Winnie Lin, who's a deputy chief accountant. Thank you. I'd like to take this opportunity to thank the New York City Audit Committee to having the Fire Pension Fund present the annual financial statements. Also, Grant Thornton and the Controller's Office and the Actuary Office in a collaborative process so we can make the timelines and make this process seamless. In our financial statement, the ACFR, we have the Fire Pension Fund, which is a qualified pension fund, which is referred to as a QPP, the main fund. And we also have two variable funds, which is the firefighters and fire officer variable funds. During the year fiscal year 23, we completed processing 634 new membership applications, conducted 2 classes of probationary firefighters who have since become members of the fund. Investment for fiscal year 23, the QPP investment portfolio of 18.7 billion posted a gain of 7.8% on the net basis. This gain was above the policy benchmark of 7.2% and the actuary assumed rate of 7%. For the 5 years ended June 30th, 2023, the QPP annualized return remained positive at 6.9% and ahead of the policy benchmark of 6.7%. The firefighters posted a gain of 10%, slightly below the policy benchmark of 10.1%. The fire officer variable fund posted a gain of 10.3%, ahead of the policy benchmark of 10.1%. For the 5 years ended June 30th, 2023, the firefighters and fire officers variable funds had a return of 5.5% and 5.6% respectively, while the policy benchmark returned 5.5%. Thank you. I'll take any questions now.
I'm going for the deficiency letter again. I mean, the management letter, deficiency letter in this case. So in this case, we also have some IT issues. And according to the letter, says after, well, also there's 2 letters, right? There's one from June 30th, and then there's another one from October, which I wanted to ask Grant Thornton about. But first, let me get to this. After multiple attempts to reach out to members, this is in the June 30th date. After multiple attempts to reach out to members of FDNY management, no response was provided for why the GitHub branch protection setting wasn't turned on even after multiple inquiries. So my question is, why not?
As you know, the Fire Pension Fund is separate from corpus funding from the fire department. The Fire Pension Fund relies on the fire department in terms of certain IT issues. And they have the EUPS system. And we try to get information from the fire department. Whether they're responsive or not, we have no control over their granting us access. So this is a continuing process that we go on with the fire department, hoping that we will sooner or later be able to take over these processes ourselves in the Fire Pension Fund. We had numerous requests in which we communicate to the auditors also.
So am I correct in interpreting this as you telling me that you have kind of repeated difficulties communicating with the fire department?
We do request access and information, and that is proven to be a challenge.
Well, that's interesting. I sort of don't know what to say about that.
You know, we are at the impasse too.
Yeah.
You know, it's not like we don't make numerous requests, and we share all our requests with the auditors.
And the fire department knows that this gets flagged.
They know it gets flagged because we let them know.
And that the audit committee is asking about it and wondering why the fire department isn't responding to requests for anything, that they don't care probably about the audit committee.
Well, they might look at it and say, is it material or non-material? They will start at that. But it's not for a lack of effort on the Fire Pension Fund side. We always try to get as much information as we can to meet the requests of the auditors.
And so then the letter goes on to say, management will make an effort to address it by the next audit. So management in that sentence refers to maybe you guys?
Yes,
versus
fire pension
management
fund.
in the
We'll make an
previous
effort, as
is
we have
the-
always done.
Okay, so in the first sentence, that management is FDNY management, and then the second sentence, management is pension fund management.
Pension fund management.
Okay.
And we
thanks
will
for that
continue to make tireless effort to get this information.
Okay, and while I've got the mic, I just wanted to ask Grant Thornton about this management letters, because there's two dates on some of these letters, and I'm wondering why. Like, so for the fire department, like, what's the difference between a letter that refers back to June 30th versus a letter that refers back to October something for the same department? One of them cites deficiencies and the other one doesn't cite deficiencies.
Yes, so two letters were issued for those who had more than, say, deficiencies greater than a regular deficiency. So if there was a significant deficiency, the system received a second letter that communicates the significant deficiency. Each of the systems receive what's referred to as a no material weakness letter. That's the first letter that you see. So each system has that letter. And then if there was an additional deficiency identified that rose to a level of significant deficiency, that was communicated separately.
Okay, because it confuses me because it looked to me like the first letters, like the something referring to June 30th was citing the deficiencies, and then there'd be a letter, citing an October 26th date or whatever, that then didn't cite any deficiencies.
Because of the nature of the letters. So both letters are dated November 29th, and they're both related to the June 30th, 2023 audit. The one letter is one letter that doesn't cite any deficiencies is specifically to communicate that no material weaknesses had been identified. That's not to say that there wouldn't be any, that's just to say that during the course of the audit, none were identified. But there was a significant deficiency that was identified, and that was communicated separately.
So it's the difference between a material weakness and a significant deficiency?
So they're two separate letters. One is just to communicate that no material weaknesses were identified. If material weaknesses were identified, then only one letter would have been issued, and it would have been to communicate the material weakness.
I guess what I'm still not clear about is a significant deficiency is not a material weakness?
That's correct.
Just a quick question. When did you become corpus funded?
2016.
So it was relatively, you were the last pension system.
Correct.
And just to follow up, within fire, the organization, they don't have dedicated IT people just working on your behalf.
No. We reach out to the IT office.
That is part of the issue.
Okay, so maybe I'm not hearing, but you're saying that you don't have an IT department. You depend on the fire department's IT department.
No, I'm saying that some of the information, I think the question was if fire has a dedicated IT team to address the pension fund. No, they don't. Does the pension fund has an IT? Yes, we have an IT director currently, which we employed a year ago. That is handling all our IT business, and the IT director is the one that liaison with the fire department to make sure that we can get information.
But the reality is it is corpus funding, and if there is something that needs to be funded, you don't have to go to you don't have to go to OMB, except to be polite, and you basically can fund what your pension board believes is an important need to be funded. I mean, is that correct?
Lauren, the same. Yes, and I will answer it in the same way that Stanley from Police Pension did. We have the same process where we bring our budget to the board, and the board decides on what will be funded for the current fiscal year. And OMB is also part of that process, and they are significantly involved in saying yay or nay. So it's very similar to the police pension funds process.
Well, I was on the BERS board for a bit, and the BERS and OMB told the BERS group not to fund something, and they did it anyway, and they're still around and alive.
Correct, but the way that the police pension fund and the fire pension fund were set up was that you need 2 votes, the city vote and the comptroller vote, to pass the budget, and I believe the other boards are one of.
I see. Okay. Thank you.
Are there
I
any?
just also, not to beat this poor dead horse, but so you only have had an IT person at the fund for 1 year.
Yes. Well, it's a 1.5 years. Joined March last year, and we have accomplished a lot having him aboard. And we're working to upgrade our system, and he's a very big part of that, and he's proactive in that, and he has the support of the accounting team with him, and the other member benefits and pension payroll. Everyone wants to automate.
I have another question. So on the board, it needs a city vote and a board vote, right? And does your commissioner sit on the board?
Our commissioner's chair, our executive director chairs the board, but he does
Okay.
not have a vote. He's just the chair.
Okay, but the commissioner does not have a vote.
No. Are you talking about the FDNY commissioner or the pension funds executive director?
I'm talking about the fire commissioner.
Yes, the fire commissioner fund chairs the board, and they do have a vote.
They have a vote. And does that count as the city vote?
No, I don't believe so.
What does it count as?
That I'm not too certain of, Larry, and would have to get back to you on that. I'm
Okay,
not
because
sure.
I mean, you understand why I'm getting confused, and I think
Yes.
other folks are as well, that we start with a conversation that, your corp is funded, which means, decisions are made, and if there's something that's proving to be a material problem, there is the funding there. You can just bring that funding up and the thing can get funded. And the fact that it's not funded is just confusing. And I don't, it's just very confusing. So, and
We'll
again,
get back to you on the voting structure.
sure. Thank you very much.
So, full disclosure, I have a GitHub plushie at home. I may also have a GitHub account at one time. I think it's inactive. Just curious, let's say in an ideal world they actually listen to you. What would move them to turn this GitHub branch protection on? Would it be a policy or hiring more people, or both?
It would be a policy. Hiring more people would not, address the problem. The issue is having access, and it has to be a policy on the FDNY side, not on the pension fund.
Thank you, sir.
You're welcome.
This is a question for the chair. Could we, because I know in prior meetings we brought other staff members from other agencies. Can we bring the IT side of FDNY, not the pension
No.
side? We couldn't, no.
We could discuss that further, but for
Okay.
right now, if there are no other questions, I'd like to thank you for coming.
I'd like to thank the audit committee once again for having us. Thank Grant Thornton, Actuary, and the Controls Office for a collaborative process. Looking forward for work with our controller, actuary, and whoever the new auditors will be or the continuing auditors. Thank you.
Larry, if you look at the notes to the financials and the standalone, on the bottom of page 17, it identifies how the voting goes.
Okay, I'll take a look.
Next up is OPEB. Mark's favorite.
Good morning. Thank you for the opportunity to present the New York City Post-Employment Plan financial statements as of the end of June 30th, 2023. My name is Man-Han Chung, the Assistant Director for Accounting Service at OMB. Joining me today are my colleagues, Christopher Santangelo, Assistant Director for Miscellaneous Budget, and Tom O'Hara, Administrative Actuary from the Actuary's Office. For the fiscal year 2023, the OPEB plan net position decreased by $58 million due to an increase in benefits payments. Total net position at the end of the fiscal year was $5.3 billion. From the statement of changes in net position, investment income increased significantly from $3 million in 2022 to $152 million in 2023. This was a result of favorable market conditions. The city contributed $500 million as a prepayment for fiscal year 24 expenditures. Total employer contributions to the trust for the fiscal year amounted to approximately $3.3 billion. Total OPEB liability increased by approximately $5.4 billion, of which 2.6 was a result in the change of assumptions related to pre-Medicare trend rates and also a change in discount rate. There were no subsequent events to be disclosed as of October 26, 2023, when the financial report was issued. Thank you.
Thank you. Anybody have any questions or comments? Very big number. At this point, since there's no comments or questions, there's a presentation that was in the package from Grant Thornton.
Sure, thank you, Michael. Would it be easier if we shared screens? Okay.
Mikhail, do you have the? Mikhail, do you have the 2023 annual audit presentation? Can Patsy share screens? Or Will? Mm-hmm.
Patsy, if you're on, are you able to share screens?
I can share this as well, and I just need a second to queue it up.
Thank you, Will. Okay, while he's queuing that up, we have the presentation. It should look like this. All right, so while Will's setting that up, The first page just goes over some of my engagement team members. It's not the entire engagement team, but it is my core management team. Then we'll move on to the next slide, which is the audit timeline. So we start this audit planning procedures and our acceptance procedures in March. Planning goes through May. Risk assessments, field work, then go through the June to October timeframe for an October release. Okay, moving on to the next slide, we have the responsibilities. So Will, we're on slide 3 now. Those charged with governance. So I'll start with the responsibilities. I'm not going to go through all of the responsibilities, just some highlights. Those charged with governance, the audit committee here, responsible for overseeing the financial reporting process, setting a positive tone at the top and challenging the OPEB's activities in the financial arena, informing us of any fraud or suspected fraud, including your views on fraud risk and any other matters that may be relevant to the audit. Management is responsible for preparing and fairly presenting the financial statements and any required supplementary information, designing, implementing, and maintaining internal controls relevant to the preparation of financial statements, maintaining sufficient records with respect to the participants, and full list of responsibilities is included in the engagement letter and the contract. We, as your independent auditors, are responsible for obtaining reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and issuing an auditor's report that includes our opinion. Okay, moving on to the next slide, we approach our audits using a risk-based approach. We identify what we refer to as significant risks. The significant risk related to the OPEB is management override over internal controls, which is a presumed fraud risk for all audits. It is based on the presumed risk and professional standards that manipulating financial reporting process by recording inappropriate or unauthorized journal entries or making adjustments to amounts reported in the financial statements, or omitting, obscuring, or otherwise misstating disclosures by manipulating the financial reporting process. To address these risks, we obtain an understanding of the financial reporting process and the controls over journal entries and other adjustments, and the suitability of the design and implementation of such controls. We make inquiries of individuals involved in the financial reporting process about any inappropriate or unusual activity relating to the processing of journal entries and other adjustments, and then we consider any other fraud risk indicators, the nature and complexity of accounts and entries that are processed outside of the normal course of plan operations. We did identify a couple of audit adjustments that were communicated to management and ultimately booked in the financial statements, and we'll go over that a little bit later in the presentation. Okay, next slide, our areas of focus. So our first area of focus is investment and investment income. For investments, we confirm investment positions. We evaluate the reasonableness of the fair value disclosures. On a sample basis, we test year-end values to determine the reasonableness of the reported fair values. We test on a sample basis purchases and sales throughout the year to determine the reasonableness of those reported fair values, including the net appreciation, depreciation, and fair values. We evaluate the reasonableness of any investment expenses. And again, audit adjustments were identified, but there were no significant exceptions noted. Another area of focus is the OPEB liability. So we test the completeness and accuracy of the census data. With the assistance of our in-house actuary and collaboration with the actuarial team, we assess the reasonableness of actuarial assumptions and inputs that are used in the calculation of the liability. And then on a sampling basis, using our census automation tool, we select members included in the census data, and then we test the completeness and accuracy of the selected demographic data and participation, eligibility to participate. Moving on to the next area of focus is benefit payments. So we test the completeness and accuracy of the benefit payment population, and then we assess the reasonableness of any accruals and estimates related to benefit payments. On a sample basis, we select certain benefit payments and vouch those payments made from the trust, including any subsequent payments to search for any accruals. Other areas of focus include contributions and the adequacy of disclosures. Okay, next slide, please. So we utilize, as I mentioned earlier, we utilize our in-house actuary to assist us in the reviewing of the actuarial assumptions and inputs used for the total pension liability. We also use our New York pricing group for investment valuation purposes. And then on this audit, we use Galeros Robinson as our subcontractor. Okay. This is just a placeholder to remind us of the importance of cybersecurity, internal controls over systems, and segregation of duties. Okay, I'm pleased to report that we issued an unmodified clean opinion. There were no scope limitations, and we had open and effective communication with management. Okay, certain reversing entries. So we did, as mentioned earlier, we did identify some adjusting entries. Reversing entries for prior year accruals were booked incorrectly. And we also identified purchases that had a trade date of 6/30 that were settled in July that was not recorded. Both journal entries have been recorded by
How
management.
much were those?
I believe we have on slide, no, it doesn't say how much. Is Patsy on?
I believe she's having audio issues.
Oh, I am. I can just, let me pull the details on the entries and I can get back
Okay.
on.
Okay, so while Patsy pulls that up. All right, so if you want to move on to the next slide, please, Will. Other required communications, I'm not going to go through all of these. There was a significant deficiency identified that was communicated, and we'll go to that in a moment on the slides. We're not aware of any significant or unusual transactions that occurred. We didn't have any disagreements with management, I'm pleased to report. No significant issues or significant difficulties were identified during the audit, and we didn't have any difficult or contentious matters that were identified as well. There were no modifications to the audit report. It was a clean opinion. Okay. Patsy, did you find those numbers? All right, we'll wait until, I'll keep moving until we get those numbers. I don't know them off the top of my head.
I do.
Okay.
Oh, sorry. Just,
Nope, that's okay, go ahead.
Okay, so the impact of the investment entry was about 247 million. And the impact of the reversals on the benefit payment items, 175 million.
Thank you, Patsy. Were there any follow-up questions? Okay. Oh, that's what you said. All right, so moving on to the next slide. So we're responsible for obtaining reasonable assurance about whether the financial statements are free of material misstatement. Our audit includes consideration of internal control over financial reporting as a basis for designing our audit procedures that are appropriate in the circumstances for purposes of expressing our opinion on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of the plan's internal controls. Accordingly, we don't express an opinion on the plan's internal controls. We do communicate any certain deficiencies that were a lesser magnitude than significant deficiencies were communicated to management. Anything that rose above a significant deficiency will be communicated in this presentation. All right, the next slide. So this just goes over the definitions of the different levels of evaluating deficiencies. You have control deficiencies, significant deficiencies, and material weaknesses. We did not, so communicating the significant deficiency is on the next slide. So the draft financial statements did include certain errors related to the reversals of prior year accruals, as well as omitting certain investment transactions that should have been included in the OPEB based on accounting policies. So we have a recommendation here that management should increase the level of precision of review over the financial statements and allow for sufficient time for all levels of review to occur. Okay. We are also required to communicate the quality of accounting practices. The significant accounting policies are detailed in the notes to the financial statements and are considered appropriate in all material respects and consistent with the prior year. The most significant accounting estimates were the fair value of investments and the OPEB liability and its disclosures. So we have assessed the financial statements and disclosures for clarity and completeness, and the footnote disclosures appear to be informative, consistent, and clear. Okay, this next slide just communicates certain insights that we're using, certain technology that we use during the audit. I want to highlight our census automation tool, which is, we use on all of the retirement systems, including the OPEB. Okay. And then the next slide communicates our robust quality control system supported by comprehensive policies and procedures over auditor independence. The system enables us to evaluate and maintain our independence, and our policies are designed to ensure we serve our clients with the requisite integrity, objectivity, and independence. So we evaluate independence, and I'm pleased to report that we are independent. That concludes my presentation. Does anyone have any questions? I do like to include our commitment to promote ethical and professional excellence. It's a hotline, but it is not intended to act as a substitute for whistleblower obligations. Does anyone have any questions?
I have a statement. Page 7.
Okay.
Thank you for using a minority woman business enterprise subcontractor. We greatly appreciate it at the committee. Thank you.
Thank you.
Are there any other questions or comments? Okay. Thanks, Sharon. That concludes the five-minute break before we go into executive session.
One random question. Thank you. It's regarding to the funds and investment. Maybe I have it. Maybe it's not here. But
Are you in the OPEB?
yeah, probably. Sorry, going back so late. I think there was a page regarding financial funds, or am I mistaken? Like financial currency? Maybe I lost that page. Darn it. Yeah.
Our investments is on page 17, and it has a breakdown, but there are no foreign currencies.
Good. Okay, that's it.
Thank you.
Yes, let's take a 5-minute break and then we'll resume an executive session.
Mikhail, we can pause recording.
Now
Thank you.
we're back in open session. I'd like to have a motion to go into executive.
Moved.
Okay.
Mikhail, we could stop recording.
We're now back in an open session, and since there's nothing left on the agenda, I'd like to have a motion to adjourn the meeting.
I move it.
Thank you. We are now adjourned. Thanks, everyone. Hope you feel better.